Hi friends, Tom Sherman with Benchmark Mortgage here. Hope you're having a great day. Today we're going to be talking about renting versus owning. Here just a few weeks ago, a very well-known financial planner in the United States said that more people should rent a home than ever before in the history of America. And I don't know that I necessarily agree with that. I think that's a negative way to look at the economy, and obviously it's negative for home ownership, but it's also negative for individuals because owning a home is one of the best things that any person can do. It truly is the American dream. But having said that, owning a home isn't always the best thing you need to do. Sometimes renting is a wise choice. So today we're going to be talking about the differences between renting and owning. First and foremost, you need to realize that if you're owning a house, you're typically going to need to put 1 month of rent on deposit with the landlord. When you buy a house, however, you need to put 3.5% to 5% down on the purchase of that home. So the first thing that you need to pay attention when you're looking at renting versus owning is that owning a house is going to cost you more money up front than renting a house. So if you don't have any cash and you don't have access to a gift, you may have to rent just because that's the only option you've got. The second thing you need to consider is that when you rent a house, you have a little bit more flexibility than when you own a house. What I mean by that is when you rent a house, you're typically on a 6-month or 1-year lease. And as soon as that lease is up, you can go wherever you need to go. When you buy a house, you're typically on a 30-year mortgage. And the only way you can get out of that 30-year mortgage is to sell the home. So you're limited by how the market is performing. You're limited by the number of buyers that are in the market. You're limited by the difference in what you owe versus what you can sell the house for. So owning a house ties you down to a location a little bit more than renting a house. The other thing you need to realize is that home ownership, there's a lot of pride that comes with home ownership that doesn't exist when you're renting. So there's a lot of personal self-worth that comes when you buy a house. That's definitely something you want to consider as well. Last but not least, you need to remember that owning a house is an investment. A home hopefully will appreciate. A mortgage, you're paying down that mortgage, so you're building more equity in a home. There's pride of ownership. There's all kinds of good things that go into ownership that you're not going to have when you rent. Last but not least, you want to consider the fact that renting has a fixed monthly payment, but you are still basically paying for the maintenance of the home. You're still basically paying for the taxes of the home. You're still basically paying for someone who owns that house to have a good return on their investment. And I'm a firm believer if you can afford to buy, you might as well make that return on investment yours, not someone else's. If you have any questions, call me at 214-680-1166 or reach me at tomshermanloans.com. Thanks and make it a great day.